Time for Jim and Stop Trading.
Apple, you don't necessarily buy it ahead of a launch. That does not work. But we have two pieces today. Bank of America and TD Cowen talking very positively. The Cowen piece talking about artificial intelligence and how good they're going to fare. Wamsi Mohan, who's an analyst I've really come to like from Bank of America, global app store revenues grew 12% and service up 14%. So in other words, don't buy it for the cycle. There's a lot of other things going. And I think that that Apple remains a kind of a nice port in the storm, kind of looking for those. That's it. Because it's an AI beneficiary. Whoever's spending a lot on AI, they get to take advantage of it without having to spend a lot on AI. People should read our Broadcom note that was out last night about what to do when the stock is down this much. That's for the club. People have to I urge people to get it because it's unemotional. And it's what's worked for us before. Because remember, this stock is up huge. People feel that it's not been a good stock. That's quite wrong. It's been a great stock. And it will still be a great stock. It's $7 in earnings power.
Yep.
Thank you for Ben Righteous from Melius. $7 earnings power. You go sell it. Go ahead. Just sell it. Just get out. I want people to get out now. The fabled get out now. Sell it to 130. Good luck to you. I'll see you tonight at 11:45.
Here we have the current stock market analysis for Apple Incorporated, stock ticker AAPL. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comment section below so that other traders will be able to find this information more easily on the platform. So here we have the 4-hour price chart for Apple. Here we can also see that the share price itself has not been immune to the recent selling pressure that has been seen throughout the technology space. Current lows come in right around the 217 mark. 217.48 represents the near-term low that we see in this stock. And as we can also see, the share price itself has now moved well within the exponential moving average cluster for this time frame. So with this price chart, what we're going to be doing is we're going to be looking at two different sets of Fibonacci retracement levels and identify some important support and resistance zones that can hopefully be used to generate profitable trading strategies for this stock going forward. So overall, the near-term low for the stock does come in at 196 even. This was a prior spike low, which did represent a bit of a false breakout to the downside, as we did see that the share price broke below the 200 period exponential moving average on this time frame. That would be this rising blue line toward the middle of the price chart. So as we can see here, share prices did break below here and then also below that 200 psychological price handle. But then share prices did manage to reverse quite forcefully, and with these new highs posting at 232.91. As we can see here, these more recent price highs failed to match the prior price highs, which came in at 237.21. So this recent price failure here is a bit significant, given the fact that we were not able to retest those prior 237 highs. So as things currently stand, we're in a bit of a sideways consolidative trading range here, given the fact that we are now within the exponential moving average cluster, and this does suggest that share price momentum is likely to be muted. Not a huge amount of trend activity is likely to be expected here in either direction. And for this reason, I do think that the stock needs a catalyst here near term in order to sort of inspire a new trend. So this could start to happen here relatively soon. There are some events that have been planned by this company near term. I will be discussing those in upcoming videos. But for the moment, we do have these price levels that we do need to sort of outline. In the prior comment, Jim Cramer goes over some fundamentals of the company. I do want to sort of mention, he's such a big figure in this business. I do feel like I need to sort of mention that I am not a fan of his, and the reason that I say that mostly is because his trades do not beat the market. He has a charitable trust portfolio that he kind of advertises on his show. It does not beat the market, and this is well documented. So I just wanted to sort of mention that first because, most of his trading calls really do need to be taken with a grain of sand. I think that most of his failure to beat the market rests on the fact that he chooses stocks based on whether or not the CEO is willing to come on his show. And I really do think that it's that simple. There are certain CEOs that have come on his company for years, and they just so happen to be in the charitable trust portfolio. So it's really not difficult to beat the market. He does not beat the market. And this has been consistent and it's been well documented. So I just want to sort of mention that I'm not really trying to advertise James Cramer here. But he did go over some fundamentals for the company, and near term we can see that the share price itself has been trading under a bit of pressure, most likely due to the fact that we've seen huge amounts of selling pressure throughout the technology space and the market as a whole. So Apple has not been immune to these price levels. So as things currently stand, I think that the bias here is going to remain largely sideways until we start to see some sort of movement, probably in the broader market. We do have some event risks, as I said, coming up for Apple, some new product launches, some new events that are going to be seen near term. But for the most part, I really don't think that share prices are likely to see any major trend activity unless we see a break below the 209.80 level. The reason that I point to this area specifically comes from the fact that this is the 61.8% Fibonacci retracement of this most recent trending move higher. So essentially, the way that I'm reaching this number is to take the 196 lows, extend these to the 232.91 highs, and then this gives us roughly a price on at right around 210. In addition to that, we also have this rising 200-period exponential moving average, and we can see that in prior cases where share prices did break below this level, this was the share price itself managed to recover quite quickly, and overall, we do have to then say that support zones were developed in this area, even though we did see a bit of a spike lower. This would have to be considered to be a false breakout. So unless we see a significant close below here, and a significant break below here, and a daily close below here, I would not expect to see share prices, take a significant dive. In this case, where share prices did move below the 200-period exponential moving average, we did not get a daily close below this level. So this would have been the initial sign that share prices were about to initiate or enter into a false breakout type of condition. And then, as we can see here, those stock prices did move all the way into the 232 range before finding resistance. So to the downside, this would ultimately be my main price level to watch. And then near term, I would probably be looking at roughly 225.30. I think that if we see a break above there, then we're looking at a near term retest of this 230-291 level. However, given the fact that overall momentum has been slowing in the market, I do expect to continue to see sideways trading activity from Apple near term. So here's the current stock market update for Apple Incorporated, stock ticker AAPL. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.